Chapter 3-6A, Audrey Martin and Beth James are partners in the Country Gift Shop, which employs the individuals listed on the page here. Paychecks are distributed every Friday to all employees. Based on the information given, we are to compute the amounts listed below for a weekly payroll period. All right, so the first thing we always need to keep in the back of our minds is, are any of these employees going to make more than $110,100, which again is the maximum that they no longer have to pay Social Security tax on? So let's kind of take a look and figure out what would be the salary that somebody would have to make per week or per month that would put them over that maximum amount. Okay, so going to my tools, the basic calculator, all of these are weeks, but this person is a month for some reason. So let's see what we can do. Well, there's 52 weeks in a year. So if we take our maximum of 110,100 and divide it by 52 weeks, anybody who makes over $2,100 and approximately $17, that's where they're going to hit that maximum. Well, if you look at our weeks, we don't have anybody who's going to fall in that category. Okay, so we're not going to have to worry about that maximum here. But this person is per month. Now, it's not as simple as taking the $2,980 divided by 4 because every month has a different number of weeks. So here's what we're going to do. We're going to take the $2,980 times 12 months. Okay, so they have an annual salary of $35,760, and then we're going to divide that by 52 weeks. So their weekly amount is actually $687.69. Okay, so that's something we're going to have to take in consideration because they get paid weekly, so all of this is going to be in weeks. So number one, there's nobody here we have to worry about earning more than what they have to pay Social Security tax on. So I'm going to start with this person right here just because we've already calculated their weekly amount. So their weekly amount is $687.69, so that's the total amount that's going to be taxable here and the amount that's going to be taxable here. So I'm going to go ahead and put that in here. $687.69, $687.69, okay? So let's just continue on down here. Everyone else, $535, okay? That's not going to put them over the amount, so both are subject to both taxes. Same with our 485. 485 times 52 weeks isn't going to put them over the amount for Social Security, okay? But here's something interesting. These are our partners, okay? So partners make $950 per week, but what we're looking at here is a little bit different. That's not their salary. The $950 that each partner receives each week is considered a drawing or a withdrawal, so it's not even a salary payment, so none of it is subject to taxes. It's like in other accounting classes you have taken where it's just owner's drawing and there's no taxes withheld. So now we're ready to calculate our OASDI taxes, okay? So everything on this left-hand column is going to be multiplied times 4.2%. So 535 times 4.2% is $22.47. We have $28.88 here, which will be withheld, and $20.37 here, and those are both going to be 0. Okay, so then for our high tax is 1.45%. So 535 times 1.45 is 676. This one will be 997, and this one will be 703, and then we have 0 and 0. So what we're going to do now is we're going to add everything up. Okay, so we end up with a total of 1707.69 and 1707.69. And I'm going to jump down here. Now keep in mind the employer OASDI is, we're going to take this amount here times the 6.2% because they pay 2% more, so it's going to be a total of 105.88, whereas this total here for employees is 71.72. And then our high tax total is 24.76, and that's going to be the same amount for the employer, 24.76.